Good morning to everybody. Yesterday, the currency markets remained under continuous volatility pressure. And really, yesterday was very interesting a day from that point of view. If you know, after initial remarks by United States Treasury Secretary Mnuchin regarding the weaker dollar, which sent the American currency under constant selling pressure. After that, the IMF chief, Ms. Lagarde, told that current kind of tax cut policy in the United States should prop up the United States currency. Absolutely different point of view as we see. And afterwards we had a kind of ECB meeting. During that meeting, Mario Draghi, the president of the bank, did not tell something really strong against the current surge of the euro price or regarding the current verbal speaking from the part of the United States monetary authorities. So we did not see a kind of initiation of a kind of currency wars between the major nations, and that's very good, because we can imagine how the market could be volatile if any kind of chief of the central banks among the majors will start to speak in favor or against their own currency policy. The market will be quite volatile. So that's good that Mario Draghi was so, let's say, so silent. Let's say so. Regarding the today's situation, let's to be as short as possible. The euro dollar, we are looking to buy it at 23.40. Ready to stop a position in case of below 120, where we see a fast, reliable support zone in the currency. We are ready to rebuy it in a possible downtick to 22.20. But at the moment, if we look at the graph of the euro dollar, the situation is more or less now, after the recent technical indicators, a little bit stabilized, flattened after yesterday's overbought kind of conditions. And today, after the levels of 25.38 was touched during last global trading session, and after we had a kind of good correction to 23.64, we still predict the currency should go higher from here. Maybe not now, let's leave that for next week, because today is Friday and the closing of the week is in front of us. So we don't expect the euro will go much higher from here. Maybe it will stabilize somewhere around current levels. But also we don't see kind of continuous move to the downside. But if we see that we are ready to buy a possible test of the short-term uptrend around 23.35.40, with the stop as you see below 123. Regarding other currency pairs, the situation is next. We closed yesterday our short in dollar yen at 108.82. We did not wait for the targeted level of 108.30. Excuse us if we were wrong. If we are wrong with your positioning, because we did not inform you about such kind of changes. But now we are ready to sell the currency on a possible correction to 110.50 with a stop, with a very close stop, and we still target a major support zone around 108.1030. Sterling, we were lucky to sold it yesterday at 43.40, but we were also lucky to close this position this morning at 41.64, because we're still expecting this kind of currency pair higher from here, and that means that any kind of downtick should be bought. And we are ready to buy the currency on a possible retest of psychologically important level 140 with a stop below 39.50. So no changes here. We're still bullish on the currency, and any kind of correction lower should be met with a good kind of beats. Dollar Swiss franc still the same. We are ready to sell at 95.30, adding at 96.60 with the stop above 97. Here the situation is the same. We expect the dollar Swiss or any kind of, by the way, any kind of other Swiss crosses after yesterday's remarks by S&B Chief Jordan that the economy in Switzerland starting to improve, and even the inflation situation starting to improve. And besides of the fact that the S&B did not stop a kind of intervention in the market in case if they see a stronger Swiss franc, we still expect that yesterday's words by the S&B chief should not be misinterpreted by the market, because it's very, very important. And starting from today, we see that, for example, Euro Swiss upside potential should be limited. And you can see in the Euro Swiss, we are not just ready to buy it at 116, we are also ready to sell it at 117.35 with a stop above 118. Because we try to be flexible regarding the Swiss pairs. That's all. Regarding the dollar Canada, don't forget, today's CPI in Canada. Also, another important indicator, United States indicates its advanced gross domestic product, and the market should also closely look to this kind of indicator. But maybe not so close like to the, for example, to the appearances like appearances of Bank of England Governor Carney or Bank of Japan Governor Kuroda, or maybe the appearance of the United States President Donald Trump, especially after his wedding yesterday at the end of American session regarding the strong dollar policy. And today we see a CPI, and for sure after a series of strong economic indicators, domestic economic indicators from Canada we had in the recent past, any kind of confirmation of improving of the Canadian economy should bode very well for the Canadian currency. And in that case we can see it much lower from local levels. In case of negative results of the consumer price index, any kind of upticks in dollar Canada should meet kind of stronger selling interest. Let's say in the dollar Canada, it's we have, first of all, we have a short-term downtrend around 24.30, and we are ready to sell 24.40 this pair, and ready to add to the position at some higher. Let's see, strategy is next. We are ready to sell at 24.90, adding at 25.40 with a stop above 26. 26 it means that above a moving average 400-hour line, which is at 25.95, and also you know that 25.90 is also a very reliable resistance zone in the currency. So while we are trading below that level, we still expect the dollar Canada resumes its major downtrend, especially in case of NAFTA negotiations goes smoothly, smoother than the market was expecting some earlier. We wish you a very nice day ahead, profitable day. If you have any kind of questions, don't hesitate to ask us anytime. And have a nice weekend. See you on Monday.